In a recent development, Jamie Dimon, the chairman and CEO of JP Morgan Chase, has made headlines by announcing his plan to sell 1 million shares of the company's stock, beginning in 2024. This move marks the first time that Dimon is selling some of his stake in the bank during his 18-year tenure. The value of the shares being sold amounts to over $140 million, which represents approximately 12% of his total stake in the bank. Interestingly, Dimon's decision to sell his shares is not an isolated event. Other notable billionaires, such as the Walmart family, have also been heavily engaged in selling large quantities of stock. Reports indicate that the Walmart family has sold stocks with a cumulative worth of around $45 billion. Among the individual sales, Rob Walt, Alice Walt, and Jim Walt each sold shares worth $1.1 billion, while Lucas sold shares worth $1.360 million, and another individual sold $180 million worth of stock. As a result, a staggering $4 billion worth of stock has been sold collectively. The question that naturally arises is, why are these billionaires and wealthy individuals choosing to sell their stocks? The answer lies in the potential downside risks that they foresee in the economy. It is clear that they are preparing for a possible economic downturn, and their actions suggest that they believe it is prudent to take precautions. This phenomenon becomes even more noteworthy when we consider the implications for the general public. If the smartest and wealthiest individuals are divesting from the stock market, it should serve as a call for the average investor to pay attention. It is imperative for the public to educate themselves and understand the reasons behind these actions. Even prominent names like Warren Buffett are liquidating their stock, with an astonishing $8 billion in stocks being sold. This is surprising, considering Buffett's previous stance on holding stocks indefinitely. One might wonder why these billionaires are choosing to sell now. The reason lies in the possibility of a stock market crash, which would lead to margin calls and forced stock selling at the worst possible time. By selling now, while the market is still relatively hot, they can avoid such a catastrophic scenario. It is worth noting that these billionaires could easily secure loans against their stock, allowing them to access a substantial portion of its value. However, the potential risk outweighs the benefits in their eyes. Furthermore, there are other indicators pointing towards an economic downturn. Home sales have plummeted by 21% year over year, according to recent data. Goldman Sachs predicts high home prices and mortgage rates in 2024. Although short-term high home prices may be a possibility, it is important to consider them in relation to the current market. It is unlikely that prices will continue to increase from their already inflated state. As the economy contracts and inflation rises, insurance and taxes will also see hikes. Consequently, many homeowners may find themselves in situations where they need to rent or sell their properties due to overextending or job loss. However, it is doubtful that a significant number of people would willingly commit to exorbitant mortgage payments in these circumstances. Many may opt for more affordable rental options instead. For instance, a $750,000 house with an $8,000 monthly mortgage payment could be rented for around $4,000. Given this comparison, it seems unlikely that individuals would choose the former option. This trend is likely to be prevalent among homeowners who realize that they can no longer afford the expensive mortgages on their properties. Considering this situation, one cannot help but wonder if we are headed towards an era of unprecedented defaults by 2024 or 2025. The student loan crisis serves as a prime example. Starting from October 1st, those who have failed to make payments will have their delinquency reported to credit agencies by January 1st. Out of the 43.5 million borrowers, only 500,000 were current on their payments prior to October 1st. It is highly likely that a significant proportion of these borrowers will struggle to pay their monthly average of $503. Estimates suggest that at least 10–20% will find it challenging, if not impossible, to meet this bare minimum payment. Consequently, banks will bear more losses, making it harder for individuals to access liquidity. Now it is open for discussion. What are your thoughts on the overall situation? Do you believe it is mere coincidence that billionaires are selling off significant amounts of stock, especially when one of them has highlighted the current era as the most dangerous period seen in decades. Feel free to share your opinions below. Stay tuned for more updates on my next video.